Good afternoon, this is Christian Thwaites from Brian Janikowski, March 21st, 2016, first day of spring. So this is a Monday. Just want to give you a quick update on what's happening in the market. Today was relatively quiet. The Japanese market was closed because they do celebrate the first day of spring. But last week we had the fifth straight week of the Standard & Poor's 500 index equity market showing a gain. So for the year, we're just slightly positive, which was good because during the course of the year we saw a big V shape as markets dipped down at the beginning of February and then came back up since then. But some interesting things happening in the bond market over the last week or so. Last week, of course, we had the Fed sounding quite dovish on expected interest rate increases for the rest of this year. But then we had an interesting inflation report on Wednesday and Thursday where the overall headline number wasn't very concerning, but there were some numbers embedded in there which do give us some concern about inflation. The first one was the owner's equivalent rent, which is nearly 30% of the weighting in the index. That's to do with rent and housing, and that's gone up. And another big number was the change in medical and healthcare insurance, which is up nearly 6% year on year. So what happened? Well, people thought that there might be some inflation in the market for the first time, and we saw TIPS. What you can see here on the chart, TIPS is roughly the third one down. This is the Treasury inflation protected securities market, which are very sensitive to inflation rates. Actually had a good rally last week, and we've been invested in that during the course of the year. Also on this chart you can see what's happened in the bond market this year, where the big winner has been Treasuries, although they've come off their recent high. Corporate bonds and TIPS and high yield are roughly about the same number, between 3 and 3.5%, and then the aggregate bond fund is a little bit lower, mainly because that includes mortgage-backed securities, which tend not to do as well when interest rates decline as long-term, even callable and fixed bonds. So this week we're expecting things to be relatively quiet. It's not a busy news week, but certainly the market seems relatively confident at this point.